Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good afternoon, good evening, and welcome to Technical Analysis Explained. I'll be your host, Tom Schneider, CMT with NinjaTrader. And we have a great topic today, Technical Analysis Explained. We like to focus on one concept, one indicator, one study, whatever you want to call it. And this show is no different. Today, we'll be going over a study that I've looked at for many years that I really enjoy. That's very helpful, and it has multiple purposes. So we'll get into that. But it's J. Wells Wilder, the godfather of technical analysis. His indicator, one of the lesser known ones, but still something you might not know it's his. It's the Directional Movement Index with the ADX study. So J. Wells Wilder was developing his studies in the 50s, 60s, 70s, put out a book in the 70s, and that cataloged the indicators he was working on. The most popular, of course, not only the most popular of his, but one of the most popular indicators that he's done is the relative strength index. And that's an indicator we've talked about on this show before, but the directional movement index is really an interesting way to look at the market as well. And we'll talk all about it. We might have to do a little bit of annotation. So I'm going to pull up my annotation tools and we'll talk about this. So let's take a look at the screen. Right now, we've got the micro NASDAQ daily chart on. And the beauty of all of these indicators, as we know, we can put this on any time frame, but I'm going to use the daily just for an example here. And so the directional movement index is kind of answers that question is how do you gauge a movement, a trending movement, a non-trending movement? When can you say that a market is moving up versus down? Well, the most obvious, I think, that anybody looks at is not necessarily using a bar chart, not necessarily using a candle chart, but a line chart. You connect closes, right? And you can have a line chart that moves up or moves down. And that's fairly easy, but it doesn't really help us when we want to get a closer view of that movement and to use that closer view to gain a sense of momentum. So that's what this indicator does, the directional movement. It tries to better quantify those movements to see if we're moving up, we're moving down, and can we use that in any other way? So let's take a look at how it's constructed. Now, the study itself right here is made up of two lines, the directional movement index. It's really broken down into an up movement line and a down movement line. And you can see that here. I'm just doing some work over here. So the directional movement index has two lines up and down, and they're color-coded red or green. Now, if you don't see this, if you're colorblind, you can change those indicators to blue, yellow, whatever you want. But generally, green is the positive indicator, and red is the negative indicator. What are we looking at? Well, how is it broken? How do we have two lines based on the movement? Well, the great thing about what Wells Wilder did was instead of focusing on the close of a bar or the last price of a bar, he focused on the highs and the lows. So when we're talking about movement, we want to compare the highs, the change in the highs and the change in the lows. So for this, I'm going to turn off my annotation real quick because I want to zoom in And I can do that this way. So we're going to focus on a couple of places here where we can identify where there's definitely an up movement. I'm going to use the exaggerated views so we can get a sense of what these calculations are doing and understand that those same calculations can be applied to any two-bar comparison. So let me go to the annotation. We're going to define a movement by comparing the highs and the lows, and something has to take precedence. So let's look at the high here to the high here. This is a when we compare the highs, it's the up move. And when we compare the lows, it's the down move. And the comparison is something to the effect of when we look at the highs, we look at current high, CH, minus the previous high. Now in an uptrend, and I apologize for the color and the shaky writing, that's just the nature of this annotation. But in an uptrend, this value will be positive, okay? In a downtrend, most likely this will be negative in a downtrend. Now, when we look at the lows, we can't really have that same calculation. We actually have to reverse it. We have to have a previous low minus the current low. And in an uptrend, that value is negative. And in a downtrend, that value is positive. Okay, so what are we getting at here? We want to look at the difference and see which difference is greater. Okay, so if we're in an uptrend and you see a big move up, generally you'll see that the difference between the highs is greater than the difference between the lows. Not always the case, but in a big move up, you see this big rally, this difference from here to here is bigger than this movement from here to here. So we want to capture that. The main movement is up, okay? In a downward trend, you know, this is a very good example of that. In a big downtrend, a big move, this calculation, the previous low minus the current low, is going to be a greater value than the previous high minus the current high minus the previous high. It's actually going to be negative, right? So what we want to do is we want to determine, is a candle moving up or down using these calculations. So in this case, we have two values. We have this value, current high minus previous high, and we have the previous high minus the current low. And whichever one takes precedence, that one is going to get, we're going to use that value in calculating. We're going to give it the value. So in this case, let's say this is, in this movement, that's from 17,100 to 17,500. That's a plus 400, right? And then in the other way, the previous low minus this, it's negative, let's say 300. Well, we're going to calculate a version of this, which is we're going to assign two values for that candle. We're going to call DM plus and DI plus and DI minus. And the question is, which one is dominant? If DI plus is dominant, use that value, meaning it's greater than the DI minus. If DI minus is dominant, use that DI value for DI. If your value is not the dominant value, use 0. So it's kind of complex, but we're basically choosing which value is the most dominant, and we're going to use that in our calculation. And basically, we're going to sum up the values of those DI plus DI minus to come up with an overall plot for like a DM plus and a DM minus right here. So what does that mean? In an uptrend, those values will be mostly DI plus values. They will have more of a value. They will advance. DI plus advances, DI minus does not because it's not the dominant move. Same thing here. So DI minus, as we're looking through, let's say 14 values here, you'd have a 0 here, 0 here, 0 here, possibly a 0 here, maybe a slight minus because this low is pretty low. This looks like this would be DI plus, DI plus, DI minus, DI minus, DI plus, DI plus. And so you get and you sum up all the values, whether it's an actual value or a 0 value, because it's not the dominant trend, and you can plot that here. So what happens is in an uptrend, we should see this green line being greater than the red line. The DI plus line is greater than the DI minus line. Now, you're actually taking an average value of that, so it's smooth. That's why these are smoothed a little bit more. And then the other factor that we have is where are these values in relation to each other, right? So when I look at a trend, I can easily see that this is an uptrend. I don't really need any indicator telling me that. But before this, I want to know when I have, and let me turn off the annotation real quick. When I scrunch this up and I do this, even during this consolidation area, we still see that the uptrend is in effect, or the bulls are more dominant. Even though we have a small pullback, cumulatively, this momentum is still on the plus side. So what I'm looking at the DMI indicator for is to see which side is dominant. I'm really interested to see where those two lines cross. So let's take our ellipse tool, and I'm just going to, it's red by default, but I'm just look at it as a place to point out where we cross. I'm just going to make a couple of these, right? Here's a place. Here's a place, crosses nicely. Now you see there's a lot of crosses. Oops, I'm going to grab that. There are a lot of crosses here, so I'm going to kind of ignore that. Maybe look at this one. I'm interested in them when they happen. It's if they follow through. You know, everything we do with technical analysis, we don't want to do in a vacuum. We want to have confirming or not confirming indicators to help us guide us. But here you can see where the green line, and I'm going to move that one. We can actually delete that. We have an extra one. We see the green line trend down below the red line, right? And in this case, we're in a downtrend here. You see a little bit of flux here, crosses below the green line, quickly comes back up. We're still saying that, hey, this is at the end of this negative bearish trend, right? This bearish trend is continuing. It peaks when we get to the bottom of here, starts to turn down. And I might think, well, okay, maybe this bearish trend is beginning to abate a little bit, and we start to see the green candles come in. We start to see the DMI positive, DM positive line come up. The DM negative line is declining. They're getting together. And then this convergence right here where the green surpasses the red, that might be an indication to get long. And again, this is a daily chart. You can use this on intraday charts as well. And so we see that as the trend moves up, this is still staying positive. And I mean positive above the red. Okay, it's in control. Bulls are definitely in control here according to the DMI ADX. Now, here we go. It's still in control, but at some point, we see a little bit of a capitulation and bears come in. Now, this is just a pullback, we see that, well, we see some crosses, right? We don't see this definite downtrend because the downtrend did not continue. We didn't see the definite uptrend continue on the red because the downtrend didn't continue. It's kind of confusing, but we want to see which line is dominant, which one is in control, which one is greater than the other one to say this is where the bears and bulls are in control. This is all about bias. This really isn't about the strength of the market. Okay. So we can see we've had a nice uptrend in the micro NASDAQ since, well, you could say since October. We've talked about October lows before, but really beginning of the year, we had a little bit of flux. And since about January 18th to, what was that? About a month, we saw an uptrend. Little bit of consolidation here, little bit of chop here, but now we see these uptrends in the green line and the downtrend in the red line. That just means this is getting stronger on the bull side, and we can see that uptrend, two big strong red green candles, could be why this turned around. And if you could use rectangles as encompassing rectangles to kind of see, okay, well, if I were to join on the price where these areas were, you know, connecting the nodes of where they crossed, green's in control, and I might do this. I might change the color, right? I wish we could, you know, be a little quicker with this, right? Somehow identify where an uptrend according to DMI. So draw me a green rectangle. And then for a short time, very short time, we're in a downtrend. And again, I can draw another rectangle and connect these two nodes. I got to be a little bit careful about where I put my top here. But here I can say, wow, that's a really short time frame that the bears were in control. And even then we had this big green candle undoing what was being done before. So you know, it's just kind of, in my mind, it's red or green. Are we bullish? Are we bearish? And that's what the DMI can help with. Now, I want to show you, I'm going to clear these out. Remove all drawing objects. Great. I want to show you what it looks like, which study you're using. So if you go to indicators and you scroll down on the left in your available indicators, the first one you run across is what you want to use, DMI. And when you add it, there are some things I like to look at DMI with just the two DM levels, the plus and the minus. And you'll see over here a couple things to change. I always use the calculate. On a daily chart, you can use price change. On an intraday chart, you could use price change or each tick. I usually get rid of the label. Doesn't help me anything. But I change the colors and I also take away the ADX plot because to me, it just gets in the middle. I have another way I use the ADX. And you can also change these lines. 25, I would change that to transparent. That basically removes the line from your chart. The lines here are really for the ADX study. You could do the upper too, 75. You could change that to transparent, but you don't really hit that too much with these studies. I also changed the transparency for ADX, or the color to transparent for ADX. And I will change the plus DMI, or the plus DI, I should say, and the minus DI to different colors. I like green and red for those colors. You can change them to whatever you want. That helps you identify which one is on top and which one is on bottom. And you know that if, in my mind, green is on top, that's a bullish. And if red's on top, we're bearish. So I changed the thickness too, and you get the idea there. But that's basically what we're doing. We're looking at not closes. We're looking at the differences in highs and lows to determine, should this move be marked as an up move or a down move? And not only that, the intensity of the move. A big, strong up move versus a little up move. In this case, I'm going to zoom in real quick. and real fast and real close. Look at this. This high right here is slightly higher than the high before. This low right here is slightly higher than the low before. This red candle is still considered an up move. Now, it's not a big one. It doesn't contribute to the calculation of the DI too much because it's so slight. And you think, wow, that's an up move. But if you look at it, the pricing on the low and the pricing on the high is greater than the high and the low on the one before. So that entire candle is slightly higher than the one before it, even though it's a pullback and it closed lower. So it kind of gets rid of those maybe false moves that, and I say false, that's probably not the right term, maybe a fake out move where the market does close lower and then maybe returns the next bar. Didn't happen here, but it can happen. So that's the DI or the directional movement part of the index. I do want to go now and let me see. I've lost my chart, so I'm going to swing over here, and that's not a good way to do that. We'll just modify this study. I had a whole nother chart, and for some reason I can't get to it. We'll change the indicators. First of all, I'm going to remove the example indicator. So we only have one panel, and I'm going to change my DMI study. Actually, you know what? I'm going to add it again. I shouldn't have done that because we're going to change this to show ADX in a separate panel. And so the way I do that is I take away the label. Again, I'm going to say, let's do each price change. I'm going to go down here. And in this case, I'm going to change my 25 line to maybe black, and I'm going to make it dashed. We don't need to have a color so much. It's just a threshold. The line here is a threshold. 25 is kind of the accepted default value, although I've seen 20 or 30 in a rare occasions, but that's more for a filtering effect that we'll talk about in just a moment. I'm going to get rid of the DI. I'm going to change those values to transparent. I'm not really getting rid of it. I'm just making it so we can't see it. It doesn't interest me in this study. Now, the color of the ADX, I like to try and keep it somewhat neutral. Red, green is for, the directional movement aspect of the study. Here, the ADX being a derivative, I'm just going to show blue. And you could change whatever, you could make it pink, you could make it green, you could make it yellow, whatever color suits you and suits your background well. Here's the ADX. Now, what is the ADX? This is a really interesting study because it takes these lines and it creates a ratio based on the difference of these two lines over the sum of the two lines. And you'll always have a value, and it multiplies it by 100. You'll always have a value over 0, less than 100. So it is somewhat range bound, but that's not what we use it for. Here we go. What we're looking at is to see if this market is trending or not. Okay, this doesn't tell me anything about direction. To be very clear, I will never know from ADX if I just have that information. I don't have any other information. I do not know if the market is going up or down. I need price history for that, right? Now I could use the DMI and say, wow, if the green is on top, then it's probably trending up. If it's red is on top, it's probably trending down. But ADX will never say what direction we're trending. What it will tell you is, are we in a trend or not? And how strong is that trend? So this is great on a chart. Again, I have this threshold of 25. And you can see if I mark out, I'm going to use a different way to mark out these trends. We have region highlight X. And I'm going to just highlight a region, let's say from here to here. Oh, and it doesn't extend. We'll do it again. Region highlight X. We'll do it from, so it's going to be wonky because it's only going to fill one panel. So this tells me in a quantitative way that we are trending. Now, because there is a lag, it's a 14 period calculation. It doesn't catch the bottom. It doesn't catch the top, but it does say, yes, we are trending. So if you're thinking about this and you're, pretend we're over here and you've got this look, the market's been down. The market's been down since July. We rode this down all the way to the low in October. It's a pretty long downtrend. 3 months, 3 months, it's in a downtrend. But all of a sudden, the trend, we have this rally, but the trend indicator is just popped above 25. And it continues, and it continues, and it continues. Now, the trend necessarily isn't always going to move up with the price or with the ADX, but it keeps us in the ball game, right? And we see as this is trending up, that market is trending up. We get almost, we did get to 40, and that's a pretty big trend, right? It's just saying, look, in the last 14 days, we got this ratio up to 40. That's pretty big trend, right? And you can see that's even with the NASDAQ, that's a pretty steep trend. And then now what happens? Market starts to go the other way. This ADX falls off pretty fast. And it gets all the way to 25. This is saying that uptrend has stalled. Now, it doesn't mean it can't return, but it's just saying the trend has stalled. Oh, the trend has stalled. It went from 25 plus to down below 25. What's changing? And then it rebounds, right? And it takes a little bit for that trend to be identified again as a trending market, but then it stayed there until it didn't. We got some more consolidation. And now with every tick that just doesn't break out, and it's kind of small bodies, not really big advances in highs or lows, we get this ratio that gets below not only 25, but 20. And that's where we are now. So this is saying like this trend in the NASDAQ, somewhat weak right now. Now a breakout might turn things around. You can see a little bit of an uptick, but it takes a little bit for the momentum to catch up. Think of a train. A train can go however many, hundreds of miles an hour, right? Depending if you're, in the US, you're going up from New York to Boston on the express. Maybe you get over 100 miles an hour. In Japan, they have the bullet train. I don't know how fast that goes, but it's a lot faster than getting up to Boston from where I am. But it doesn't just start out and go 100 miles an hour, right? It takes a little bit of time for the trend to accelerate, or the trend to gain speed and momentum before the gauge recognizes like, oh yeah, it's a trend that we're in. So I like the ADX, especially with, you can put this in your market analyzer. You can bring that in, and on a daily basis, you could say, give me all the ADXs for every market, and then you can color code to show if it's above or below 25, if it's above or below even 40. Maybe you give it 2 levels and you say, okay, this one's not in a trend. This one's above 25, it's in a trend. Or maybe this one's above 40, so it's really in a trend. And you can see which markets at a quick glance on the market analyzer are trending and which ones are not. So that kind of concludes the DMI with ADX. DMI is measuring how big is this move from bar to bar and averaging it. I didn't talk about average true range. It's part of the calculation, but this movement, it's quantifying whether it's up or down, and overall, are we up or down using these green and red lines? Are the bulls in control over the last 14 periods, or are the bears in control over the last 14 periods? And when does that switch? That's what I want to know. because I want to know when there's an opportunity. Opportunities come when trends reverse. And so when can I use that as my signal, my indication? They're indicators for a reason. And then of course, ADX, derivative of these two lines, help us with trend strength. So that's about all I have to say about DMI with ADX right now. If you have any questions, you can send them to learn@ninjatrader.com. We'd be happy to take your questions there. And we will finish the day today, Jim Cagnina with bars closing. In the meantime, I wish you all a great trading day.